Hey, what's up, YouTube? I'm Zeke, and welcome to the Dream Green Show. In this episode, we're going to be talking about 4 stocks that's near their 52-week low. And you guys know I absolutely love buying stocks that I use, that I own, that I believe in, that's on sale. And when they're on their 52-week low, that means we're getting them at a pretty doggone good price. But you just don't want to go in and say, hey, it's on a 52-week low, it's on sale, and be going ahead and buy them up. No, you kind of want to look at the analytics and look at their future projections. And I'm going to show you guys how to do that in this video, because 2 of the stocks I'm bringing you today in this video are dividend kings. And you guys know I love my dividend kings, and one of these stocks is actually recession proof. And they keep on talking about, hey, the recession is coming, the stock market is overbought right now, everyone's waiting for the pullback. So we're gonna go in and look at this recession proof stock that's near that 52-week low that we can add to our portfolio to help, you know, keep us a little safe a little bit. So the way that I find these 52-week low stocks, these companies, is by using a stock screener. The one that I use is over on Mumu, and then all you have to do, guys, is download Mumu and then hit the search bar at the top and then hit screeners. But first, let me tell you guys right now, that is the platform I use, is Mumu for the stock screener, and they also are the sponsor of today's video. So I would like to thank Mumu for sponsoring this video. Right now, guys, if you download the app, just from downloading the app, depositing up to $100, you guys could receive up to 15 free stocks once you deposit your $100. And they have an 8.1 cash sweep interest that you guys can earn 8.1% throughout the entire year just from parking your cash over inside of your brokerage account on Mumu. And then they also have many other free tools in there, like the stock screener tool that I'm going to show you in today's video. They have many other tools in there that you could use to help yourself become a better trader. So if you guys do want to try this out, I'm going to leave a link to Mumu down in the description. Take advantage of the free stocks, take advantage of the 8.1 cash sweep APY interest, because that's one of the highest in the game. If you guys take advantage of all that, you're setting yourself up for a very successful start inside the stock market. So here we go. We're right back on the stock screeners tool, and then what you want to do, let me show you guys one more time. You're going to hit screeners at the top left. You're going to hit that button right there, and then you're going to hit create a screener at the bottom. Once you create your screener, we're going to look at the US markets. Also, you have access to many other markets inside of Mumu, but we're going to look at the US markets. Now, once you scroll down, you can click on the descriptions, hit price right here, and then you can hit that 52-week low button. It's going to show you all the, you could scan throughout any other prices that you want for $5 all the way up to $500. I'm gonna keep it at 0, but we're gonna be looking at the 52-week lows. And then the next thing I like to do is scroll down to where it says market cap. Under valuation indicators, we're going to hit the market cap, and then we're going to put it under any company that's above 500 million. It's not a penny stock company for me. I don't like looking at penny stock companies. So we're going to type in $500 million is over 500 million. So we're going to type in 0.500. So anything over $500,000 all the way up to multi-billions is pretty good for me. So we're getting rid of all of the penny stocks. And right now it's showing 125 results. So we could go ahead and click that right now. You could click on dividends right here, so you can screen out that you only want dividend paying companies that has a certain dividend yield. But right now, let's just take a look at it. We're going to hit view results, and then you guys could scroll through each one at the price, the change, the market cap. Let's sort it by market cap, and you guys can see right there that you're looking at some of the top companies at their 52-week low, like Anheuser-Busch, CVS, Sirius also near their 52-week low. Let's take a quick look at Budweiser. This is not one of the ones on the list, but if you guys look, you guys can see that they had a major pullback over the last year. So let me show you guys the top 4 companies that's at their 52-week low. Now, the first one we're going to be looking at is Johnson & Johnson. Now Johnson & Johnson is a dividend king. They've been increasing their dividends every single year for the last 62 years. Let's go ahead and pull up Johnson & Johnson. And the reason I love them, this is my recession-proof stock, because usually when the stock market is going through a recession and they have a 40% pullback or 20% pullback, Johnson & Johnson might only pull back 2%. It might only pull back 3%, while the S&P 500 is falling 30% in a single year. So this is one of my recession-proof stocks. And while they're going through recession, Johnson & Johnson found their way to increase their dividends, right? They've been increasing their dividends every single year for the last 62 years. And as you guys can see right here, they have a 3.32% dividend yield. And if we're looking at the company over the last year, you guys can see they had a high of $167 and they had a low of $139. So they're not at the very bottom of their 52-week low, but compared to the beginning of the year, they started off at around $145. Right now, they're seeing it at $146. So it's very near their 52-week low. Now, the reason I love Johnson & Johnson is because every single day, over 1 billion people use their products. Johnson & Johnson owns pretty much everything. All right, we come over here, right here, Johnson & Johnson, you guys can see they increase their dividends every year for the last 62 years. They have a 3.45% dividend yield with a 5.55-year growth rate on their dividends, and they pay out quarterly. But if we come over to Johnson & Johnson products, they own everything inside of the grocery store. Johnson & Johnson owns everything, and not only do they own everything inside the grocery store, they also own every single thing inside of the hospitals. All the medical equipment, they're all made by Johnson & Johnson. And check this out, guys. Not only do they provide 1 billion people every single day with their products, just last year alone, from an over-the-counter product, Tylenol, yes, Johnson & Johnson owns Tylenol. They made $9 billion over the last 12 months alone just from Tylenol. So Johnson & Johnson is one that I want to keep inside of my portfolio for a very long time. If we come back here and hit company right here, you guys can see that analysis is giving it a buy rating with a target price of $177. Morningstar is giving it a 4-star rating with a fair value of $164. And if we're looking at the company valuation, this is the PE ratio. It kind of compares it to the rest of the market on whether it's at a good value right now. If it's inside of the reasonable range, which is the little blue or grayish cloud that you guys can see on the screen, that means it's at a pretty good range. At one point, it was outside the range, above the range. That means it was overvalued. Now you would have been overpaying for the stock. And then right here, you guys can see that it was undervalued, and you guys will be getting it for a good deal. Right now, it is somewhere in the middle. If we just click on the analysis rating, you guys can see that the target price for Johnson & Johnson on the high end, this is over the next 12 months based off the detailed range from all of Morgan Stanley, Bernstein, Citi, Wells Fargo. These is all of their ratings right here, and they've given it a high over the next 12 months of $215. They're giving it a median range of $177, and they're giving it a low range of $161 over the next 12 months. So everyone is giving it a buy, or if you already hold Johnson & Johnson, just to hold on to it. They're not saying sell it and get rid of it. In fact, the next target price over the next 12 months, they'll all go up. Even on the low end, it says it's going to go up to $161. If we take a look at their revenue and earnings per share, you guys can see that. So they have been beating their last couple quarters in their revenue. And if we scroll down to the income statement, you guys can see that it is still going up. It went all the way from 21.35 billion in 2023, 2024 at the beginning, it was at 21.38 billion. And then at the end of 2024, it's at 22.47 billion. So they're continuing to grow their revenue every single year. It might not be at the fastest rate, but it's at a pretty good rate. Now, if we come over to Trading View right quick, and we'll just type in Johnson & Johnson, ticker symbol JNJ, you guys can see we're on the 1-day chart, and let's zoom all the way out. So you guys can see that Johnson & Johnson is in a downtrend, right? So over the last, let's say January, so all the way from 2022 to 2024, it is in that downtrend. But usually when it comes to the bottom of this channel right here, it shows a strong recovery, and it's coming near the bottom of this channel. So hopefully it does recover again, especially with it being at a pretty good value in this range right here. It's been showing signs of a good support at around the $143 price range in this zone right here. Once again, in this zone over here. So hopefully Johnson & Johnson does continue to trend back up so that we could get in at a good deal. Because remember, the way that you win inside of the stock market is to buy low and sell high. Do not always buy these overhyped companies that's just going up, up, and up, and you will win some. But eventually you're going to buy that top. And when you buy that top, that market is going to crash. And when it crashes, it might not recover for the next 3, 4, or 5 years. And now your money is locked up instead of you continuing to grow it over time. So you can rob the momentum of good quality stocks. Just have a good plan but you do want to get stocks at a good value like Johnson & Johnson is right now. All right, so the second stock I'm going to bring you guys is PepsiCo. Now PepsiCo is also a dividend king. I mean, they've been increasing their dividends every single year for the last 50 years. Yeah, so they've been increasing their dividends every single year for the last 50 years. Right now they're at $156, and as you guys can see right here, over the last year, early January, there was around $160. They went all the way up one point to $180, and now they pulled all the way back once again to $154. Now, another reason that I love company like PepsiCo is because I love companies that pretty much own everything in the industry. This is everything that PepsiCo owns. If we click right here, they own all of these: Aquafina, Bear, Brisk, Bubbly, Cracker Jacks, Chester Cheetos, Fritos, Frito-Lay, Lipton, Ocean Spray, Pepsi, Quaker Oats, Smart Foods, Starbucks ready to drink energy drinks, Spitz sunflower seeds, Tostitos, Tazo or Tuzo, I don't know. So in Tazos, they own pretty much everything that they can own inside of the supermarket, right? And if we come right here to PepsiCo over on Seeking Alpha, you guys can see they've been increasing their dividends every single year for the last 52 years, and they have a dividend yield of 3.47%. So usually if they was able to increase their dividends every year through a recession, through a pandemic, through all that, they was able to increase their dividends every single year. This is another dividend. This is another recession-proof stock that pays out dividends, that's going to give you your income and increase your income through a recession that you guys can pick up right now that is on sale. So if we come right back over here to PepsiCo, you guys can see if we click on company and scroll down a little bit, they're giving it a buy target as well, with a target of $185, and Morningstar Research giving it a 4-star rating with a fair value of $174. If we look again at the PE ratio, it is inside the blue cloud. In fact, it's coming near the bottom of the blue cloud, so we should begin at a super great value right there. And if we click on the analysis ratings, they're giving it a high of $200, a median of $185, and a low point of $170 over the next 12 months for PepsiCo. So this is another one that I'm currently investing in. I currently own shares of PepsiCo in, and I absolutely love owning this stock. And the next stock that I'm going to bring you guys is, of course, this one right here. Okay, if you see that right there, that's Nike, baby. The next stock that's near their 52-week low. It's not at their 52-week low, but we did catch it on the 52-week low inside of the Patreon, right? I listened inside the Patreon. Hey, guys, I'm going to be buying Nike. It's at a very good price. It had a big drop off. I'm going to be buying Nike. I dropped inside the Patreon. I dropped inside the Discord. I put in leap options on Nike. I bought some shares of Nike. I've been selling covered calls on Nike. Nike has been a very good play for us. In fact, if we pull it up right here and we come over to Nike, before I even show you guys, let's show you guys right here on Nike. Nike had a big drop off right here. All right, so it's been on the downtrend for quite some time, since 2021. Nike been on downtrend, and I wasn't comfortable buying Nike at $175. I just wasn't comfortable buying Nike at $175. I've just been patient. But when this earnings report came out right here and Nike dropped, the entire market overreacted. I said, hey, that was the time to get in. I put inside the Patreon. If you want to join the Patreon, that link is going to be down in the pinned comment section. Join in the Patreon to take you to my Discord. Over there inside the Discord, I post all my trades every single time I buy and share and sell a stock, and all my option trades. And we also have 3 pro day traders in there that post their option trades every single day, and we'll have a awesome community of traders. If you want to be financially free, I know you do because you're watching this video, consider joining the Patreon and just gain some knowledge through there, because I got a whole bunch of free courses on there too if you do want to learn how to trade. So this is Nike once again. Let's pull up Nike. So we bought Nike at the perfect entry, right when it had broke out down here. I seen a good support line, $171, and we put in a leap option on it. It went all the way back up to 90, had a little pullback near support, and it's starting to trend up again. Now if we come over back to Nike, you guys can see if we click on, we haven't even went there yet. Let's click on Nike, NKE. Okay, here we are on Nike. You guys can see, and they also do have a dividend. They're not dividend, they don't have a high dividend yield, but they do have a 1.9% dividend yield. But we click on the analysis rating, you guys can see that they have a high of $120. I don't even need Nike to get back to that all-time high. I just need them to have that I have a good entry on Nike. It's a company that's going to be around for a very, very long time. And I want to see how they perform all the way from now to the next Olympics. All right. If they're still trash by the next Olympics, then Nike might be one I need to let go. But I do feel like I got them at a pretty good value. All right. So the high is $120. The median is $92. And the low is $79 over the next 12 months. So if you download Mumu, you could go through each institution ratings if you wanted to. You guys can see if they're a buy or a sell. But right now, 56% is saying buy and 43% saying if you own Nike, just continue to hold it. All right, and the fourth stock I'm going to bring you guys is AMD, one of the competitors with Intel and NVIDIA inside of the computer chip, graphics card, AI industry. Right now, right now AMD has absolutely been killing it these last couple of years, and we've been waiting for this pullback. This is a company that has been trending up for the last couple of years, and now they're finally having a pullback near 52-week low, so we could get them on sale. Right now AMD is at $125. Let's look at the chart. You guys can see it. They had a high of $227 this year alone, and they had a low of $116, and they're at $125 at the recording of this video. If we look at the company, they're giving a target price of $185 and a fair value of $160. We look at the ratings, they're giving a high of 220, median of 185, and a low of $145. So even if it does just perform at the low of $145, we're still going to make money. And unlike the other companies on here, this is giving it a strong buy. It's giving a strong buy. 80% is saying buy it now, buy it now, buy it now, and 20% is saying hold it. Now, if we come over to TradingView and type in AMD, you guys can see that it's been trending down, right, for all year. It's been trending down, and it's breaking through a couple of our support zones, and we've been buying every support zone that I've posted inside of the Patreon, inside the Discord. We've been putting in leap options and selling cover calls on AMD and buying up shares. Any price that I could get AMD underneath $130 is a steal for me, and I've been just buying up AMD underneath it. So at this price point, you guys will say, oh no, it's been in a long downtrend, but look at the growth it's been having over the last couple of years. It had this pullback before, right? It had this pullback before. If we go all the way back to just say 2020, you guys already know what happened back in 2020. So all the way back in 2020, it's just been going up at an alarming rate. Back in 2020, it was $30, and it went all the way up before it had this big pullback that we was looking for, this big pullback, and then it went all the way back up again, and now it's having another big pullback. That's what happens when you in this technology sector playing with these AI chip companies. They're gonna have big swings up, they're gonna have big swings down, and then when they do have that big swing down, the smart investors like me and you, the smart investors, we go in and we buy up these companies on the big swings downs that we actually believe in the industry that's going to change the world forever, the AI industry. And AMD, I think they just closed the deal with PlayStation to make their next console or something like that with the GPUs or CPUs. But AMD is going to be around to play. They're probably not going to outperform NVIDIA, but as long as they're just keeping up with NVIDIA, this is going to be a banger stock to have inside of my portfolio, right? So AMD is the fourth stock that's near that 52-week low in this video that I want to show you guys. Now, the last one I'm going to show you guys in this video, that's the rule breaker that I told you about at the beginning of the video. So if we come here, we're going to type in Walgreens. All right, guys, you can see that Walgreens has been trending down, right? But it's been trending down, and you're just like, hey, whoa, that might be a great deal. Remember, you told me to buy low and sell high. It's at a very good low right now. But look, take a look. Just take a look. Unlike AMD, guys, this company has been falling since 2020. It's been falling since 2020. It's been falling since 2017. It's been falling for a very long time. AMD is at a 1 year low. AMD is at a 1 year low. I mean, on the last 52 weeks, it is at the lowest it's been over the last 52 weeks, even though it's been trending up for the last 4 years. We take a look right here at Walgreens. Walgreens been trending down for the last 4, 5, 6 years. It's been just trending down all the way from $84 down to $9. That is a long trend down. Yes, it's at a 52-week low. Yes, you can see that it's on sale. But if it's been trending down for years, upon years, that is a stock you stay away from. That is a rule breaker. So even though I say that you need to invest inside companies that you use, I go to Walgreens. I love going to Walgreens, buying stuff out of Walgreens. I think it is a awesome store to go to. I use them all the time. But as an investor, if it continues to just trend down for years and years and years, even though it's at a 52-week low and on sale, that is something I stay very far away from, because it's just not in my favor to buy a falling knife. That's something I stay away from. But let me know, guys, down in the comment section, which one of these 4 stocks is your favorite. Is it Johnson & Johnson, PepsiCo, AMD, or Nike? Let me know which one is your favorite company down in the comment section. Which one do you think is going to recover the best inside of the comment section? I think AMD is probably going to recover the best and the quickest, because technology stocks tend to recover a lot faster than clothing or any other brands. I do think that AMD is going to recover the quickest. I hope it covers the quickest, because I got some option calls on that. So once again, I'd like to thank today's sponsor of this video, Mumu. Guys, go in there and pick up your free stocks. They have an awesome, this was one of their best promotions ever. 8.1% cash sweep APY interest on your uninvested cash, and 15 free stocks signing up, deposit $100. Get that money, guys. But yeah, dreamers, go ahead and hit that thumbs up button and hit that subscribe button, because that helps out this channel more than you guys can even imagine. If you do want to join the Patreon, that link is going to be down in the pinned comment section. But other than that, guys, I'm Zeke, bringing you the Dream Green Show, and I'm out. Peace.